Hey Ross World, my money makes money. A lot of people ask, hey Ross, where do I start to invest? It's quite simple. You start with 3 to 5%. Or you can afford more than do more, but start with 3 or 5% because 3 or 5% you're really not going to miss. Okay? You're really not going to miss 3 or 5%. I promise you're not going to miss 3 or 5%. You probably blink and spend 3 or 5%. That's what you should really be investing into. 3 to 5% of your paycheck every single month. Because if you're in this for quick money, then this channel is probably not for you. If you're in this for quick money, you probably need to start day trading or do option trading. Because the stock market is a long game. Okay? Sometimes stocks perform phenomenally, right? Very, very few times in history has a stock started off at $10 and then in a week that stock was $1,000. Okay, rare. I can't even think of nothing right now that has ever happened. Okay, I know that was it Chipotle came off at $100, then it rose up to $400, but that was of course over a time period. Who would ever think that beans and rice stock would be that much? I know it's more than that, but you know what I'm saying. But start off with 3 or 5% automatically a month going into your investment account. Now, if you want to do individual stocks, that's fine. ETFs are a little bit easier and a little bit safer. And the only reason why I say that is because when you do individual stocks, you don't have a bond to help it. You don't have a bond to support it. And you say, okay, what is a bond versus a stock? And I'm going to make a short video in case you don't want to hear this whole thing. You just want to know that tidbit of information. But basically, a bond is a loan to a company, to an organization that's trustworthy, that's going to pay you back your money with interest. Okay, like the federal government. There's always bonds with the federal government. They take your money and they invest it. But as a bond, they're going to pay you back your money with interest. Okay, that's basically what a bond is. So 3 to 5% on your way to secure your financial retirement. Okay, and the reason why I like to say freedom, because when people have money, whatever you were before you had money, you're the same thing after, but times 10. So if you was an asshole when you were broke, you're a bigger asshole now that you have money. If you was a nice person when you was broke, you're even more of a nice person when you have money. And you may be more of a philanthropist. You want to now give, okay? So money is always a times 10. It depends on the money. It can be a times 2 or times 3. But when you start to establish a certain amount of wealth, you become a better version of what you were prior. And I don't mean better in the sense of good. I just mean a better asshole or a better happy person or a better whatever, okay? So that is where you start. And you say, okay, I want to get into ETFs. I have some videos that you can go and view and listen to that will help you to start off with some very moderately aggressive systems that you can put your money into and let it sit and grow and be waiting for you in your retirement. Okay, so I have a video about saving 15% of your year's salary, just saving. Then also another video, how to invest $5 a day. Okay, this is just another method. And let me tell you this. The reason why I say if you're new at this, 3 to 5% is very small and you won't miss it. Never, ever, ever put all of your money in the stock market. I repeat, do not put all of your money in the stock market. I know I preach about it. I know I teach about it. I know I tell you about it all the time. But you never, ever want to put all your eggs in one basket. You never ever want to do that. The one thing I will always say is diversification, and that's on all platforms of the financial world. This is Ross World. My money makes money. I'm out.